We're all feeling the effects of inflation as the prices of everything from food to gas have risen substantially over the past 2 years. In that vein, I'm going to address a question that I've been getting a lot recently, which is, how should I position my investments with this much inflation? Let's look at the problem that inflation poses. For starters, everything is more expensive. With costs growing faster than income, many families will need to dip into their savings or use credit to fund household expenses. If inflation were to be left alone, we could be in for a serious economic downturn. This is why the Fed has decided to step in and stop a potential inflation snowball. The Federal Reserve has one main tool at its disposal to fight inflation, which is to increase interest rates. The intended result of raising rates is to slow the economy and, if done correctly, slow the rate of price increases. To be clear, the Fed is choosing to raise rates because it's a lesser of two evils. For those who are invested in stocks, bonds, and real estate, they can attest to the negative rate impact that increases had on the economy, as each of these investment types declined in 2022. Now, back to the question posed earlier, which is, how does one invest in this climate? While a changing economic environment may be scary, it creates investment opportunities that are extremely rare. As CFP professionals, it's our job to help our clients capitalize on those opportunities and to relieve some of the stress that comes from a down market. A few of those broad strategies are minimizing cash, because the amount of cash investors keep on hand loses value during inflation. We implemented a cash management strategy with laddered CDs and treasuries in order to help clients capitalize on risk-free growth to a level that hasn't been seen in over 20 years. We're also reevaluating bond exposures. As mentioned, the Fed is trying to bring inflation down. But once that's achieved, interest rates are expected to be cut and bond prices are expected to rebound. For individuals with cash needs in the 2 to 7 year time frame, investment-grade bonds may be another opportunity for investment. Lastly, the best way to beat inflation is to take on a little more risk and buy more stocks or real estate. I know this might be a scary notion, but as Warren Buffett has said in the past, be greedy when others are fearful and fearful when others are greedy. With stock prices down, now is a great time to reevaluate long-term goals and be able to buy low. As wealth managers, it's our job to help our clients reach their financial goals regardless of what's going on in the economy. If you need help putting together a custom financial plan and investment portfolio, please contact us and one of our knowledgeable advisors will be happy to assist.